Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive buyers defended and were active at the 32 naked VPOC and the 33 support. And from there, we've seen a bounce back up into the previous day's range. Now, given yesterday's strong liquidation move, our short-term bias is going to be bearish, but with the understanding that the market is coming off of a oversold condition and there could still be some short-term upside left. So off the open, if we can break through 41.5 to 43.5, it would signal at least short-term bullishness on the very small time frame, and that can bring the 48.75 to 50.75 initial resistance into play, and potentially 55 to 57. But because our overall short-term bias is bearish because of yesterday's balance breakdown and long liquidation, sell side can be active at pretty much every resistance zone along the way. So technically, ES can even fail at 41.5 to 43.5 if the market is extremely weak. But because we're coming off of that oversold condition, we do have to see how the market is shaping up in real time off the open. But technically 41.5 to 43.5 is resistance until broken. On the downside, if we can get back below 38, that would be a very short-term confirmation that sellers are still being quite aggressive in this market, and we can go down and retest the 32 to 34 initial support zone. Responsive buyers can still be active there, but the zone now calls for caution because the market has already put in a pretty decent response in the overnight session. And if the market fails at pre-market resistance and fails at 38, then we could actually push down to some new lows. Now below 32, we have some support at 28 quarter, 30 quarter. It's not really strong support, and the zone calls for caution. And as we're heading into it, we're going to have to see just the level of weakness and downside momentum we're seeing. So 28 quarter, 30 quarter, be a bit more careful. 24 to 26 is better trade location where responsive buyers can be active. And same goes for 19.5 to 20.5 and the zones below at 15 to 17 and 08.5 to 10.5. As the market pushes deeper into these zones and gets even more oversold, there is a pretty high likelihood that responsive buyers will step in and then we'll start balancing within a range again. So the high probability scenario today is for the market to balance within a range, and it's simply a matter of where that range can establish. If we fail at pre-market resistance, then we can balance at lower prices, and if we can take out pre-market resistance, then the sell side can be active at the initial resistance zone, the 55 to 57, and then 59 quarter is the HVN of the balance that we broke down from, so that's going to be a pretty strong area of resistance. Same goes for 61, 63. So at that point, it's just going to be a matter of monitoring the underlying momentum situation and expecting the sell side to defend at pretty much every area of resistance on the way up. And the higher we go, the better the location becomes, the better the reward to risk becomes for the sell side. So even if 48.75 to 50.75, for example, does not hold, 55 to 57 is still going to be a very good zone where sell side can be active and the reward potential is going to be quite good. 59 quarter, 61.63, same idea. The higher the market pushes at this point, the better the likelihood that the sell side will step in, and then we can balance within a range and put in a pretty decent downside move from there. Again, our short-term bias is bearish, so we are going to keep the focus much more so on the short side, and we are going to be cautious and conservative on the long side. So that just means we're going to shoot for better location, look for more evidence on the long setups, and be a bit more aggressive on the short setups. Now 41.5 to 43.5, like I said, is the aggressive area of resistance, but if the market continues to show a lot of weakness off the open or downside momentum, then even 41.5 to 43.5 could potentially hold, but it is actually quite an aggressive area from a trade location perspective. 55 to 57 is much more conservative. 48.75 to 50.75 is okay. It's something we'll have to assess in real time. So those are the main ideas heading into the open. Let's see how the market responds to pre-market resistance and yesterday's low, and we'll take it from there.